Okay, we're live. It
Okay.
is Wednesday, December the 6th, and I'm with Tom. Mike is at a closing right now, so congrats to Mike. And basically, we're just here today to kind of follow up on what we did last week. We went to Mortgage 101, and sometimes it's good to be going back to basics, start getting prepared for the new year. It always comes out to be that every January, it's almost new me, new goals, new everything. So why not just get the information now towards the end of the year?
Yeah, if you're looking to again purchase something in the next 3 months, 6 months, the first thing you're going to want to do is reach out to us so we can at least get some kind of a path going or get some things together so we have a plan. And Elizabeth, again, everybody's New Year goal and rates are certainly coming down, so there's a pretty good incentive. We're going to discuss that a little bit. Um, Conforming and loan amounts kind of are also a little bit higher going into the new year, which we'll discuss. So today will just be a plethora of miscellaneous information and what's been going on lately in the market.
Yeah, and again, like we said last week, we kicked it off with just the mortgage world, what we were looking at, what was expected as far as what you needed for income, your credit, your savings, and we did say reach out to us just because everybody is just unique in their way, their situation. But one of the things that I know, like we wanted to touch base on, is also just that the rates are dropping. We know that currently we've seen a decline. Let me see if I could get this up. For some reason, I don't know. Tom, I was able to look on my Facebook right now, and the other screen that I was sharing didn't come up. So I don't know if that was just a technical issue. So as you could just talk about it, because I'm not sure what's going on. Usually, Mike is our tech guy. He's our everything guy. So
I'll see if I can get it to pull up here the screen share.
oh,
Um, or I might be sharing us.
yeah,
Um, let's see. Hold on. I have it up. What do you see now?
there you go. Woohoo! All right. So
There we
Tom's
go.
our tech
There
guy.
we
So wow,
go.
yes, there's been a definitely a decline in rates from over a couple of weeks ago. Sorry, that's my dog.
Now the dog agrees. Look, as of the 19th of October, we were just about hitting five at the 10-year, 4.988. That's when rates are going into the sevens and eights, leading into there. And then, all of a sudden, luckily, we've seen a nice little drop in the 10-year at 4.1. And, the last tick looks like it's a down tick. So, interest rates, luckily, are starting to decline in a good way. Not only is that good for purchases, but it's also good for refinances. As a matter of fact, while can you still see my screen?
Yes.
Here, CNBC. This isn't me. Mortgage rate refinance demand. What is it? Mortgage refinance demand jumps 14% as rates fall to lowest point since August.
Yeah.
So, um, again, we've talked about it before. If you are paying 22, 24, 25% or higher on your credit cards, and I think we've all, or speak for myself, have had to use them over the past 12, 24 months, now might be a good time to take some of the equity you have in your property and get rid of those credit cards, because it looks like it's a good time to kind of to consider cashing out some of that equity to pay off your debts.
Correct. And that's been one of like the biggest things. And I apologize. That was my dog going crazy over go figure Amazon. It's December, so every 2 minutes there's a knock on the door. But yes, that was one of the biggest things we started seeing is rates going down. You nailed it right there. It was just a lot of utilization with credit cards. I even saw some people paying off vehicle loans just because they did get a vehicle at a very high interest rate at one point, just because that's what they were going for. So, so there was definitely an increase in that, and really, when you think about it, is this is the right time to pretty much use your equity. Whether it's to do a remodel, to do anything, at home. If we're looking at house prices right now, I had a few people that pulled money out of their equity to make the home what they wanted it to be. So it was either adding a pool or I don't know, remodeling their kitchen or bathrooms or, whatever it was. And it was just basically because of the fact that that maybe they just couldn't really go buy their dream house right now because of the home prices or earlier in the year. So I can't really tell which way the home prices are going, but obviously our loan limits came out for 2024 and they didn't decrease. So it tells us pretty much what we're going to be looking at, as far as the market goes. So there are new limits for 2023. As you can see, conventional went up to 726,200. So that's a little higher than what we had before. And FHA did as well. So obviously, this is signaling that, and there you go, 472.30. So this is obviously signaling that there is no decrease, going on. Especially, I think in Florida, just I think the demand is still here.
Yeah, I mean, look at this 726.2. I mean, that's for the conforming loan amounts. And it's, it's two family, it's 929. You're just about a million. It's there, 3 billion, three family, even hard to say. So yeah, the loan amounts have certainly increased every year consistently.
Yeah.
And even with FHA, the same.
And here's the other thing. Keep in mind, FHA, we are able to do the multifamily investing option now at a minimum. I'm sorry, that was conventional, a 5% minimum. So we're no longer expected to have a high down payment. So if you are looking to do a purchase on a multi-unit property, then obviously this has gone up, and now we have options to help with investments.
Yeah, and that's obviously a good a product. You used to need the 20% down or more. Now they have a 5% program, which certainly helps. While we're on there, we're going to touch real quick on Hometown Heroes. While they just clicking away, if you could see that, there is still Heroes money available. So the Heroes program again. You might hear that the funds are no longer there, and now the funds are available because if when we reserve the funds, if those funds don't get used, then those funds go back in the till, and we can reloan on those funds. So and that's, I think it's up to 35,000 now. It used to be 25,000, now it's up to 35,000.
Right, and it's no longer for just certain occupations. Now you're looking at pretty much any first-time home buyer, and there's obviously a definition to that. But again, give us a call. I know that there's been kind of up in the air questions, with what's considered a first-time home buyer. Basically, if you haven't lived in owned your home or lived in the property in the last 3 years, and you're considered a first-time home buyer. Recently, I had somebody that owned a property up in New York, and basically they've been living here. They lived in Georgia for a year, down here for 2 years, and were able to prove that they weren't living in the property up in New York, and they're considered a first time home buyer. So again, as long as we're able to prove that, then we're going to be okay.
And again, that Heroes program is 5% of your loan amount in the form of a second loan where there's no payments, there's no interest. The only time you pay that money back is when you sell the property. If you vacate the property and decide to move on to a bigger piece of property, or when you go to refinance that property. So other than those three items, then that 5% of your loan amount is applied at closing towards your closing costs and any earnest money deposit refunds.
Right. And I love that we bring up refi all the time, because I think there was a miscommunication with people thinking that they were going to still keep that amount even if they refinance. It's anytime you change the terms of the loan. So yeah, refi was definitely something that was not brought up from other lenders, and it was kind of a shock when I explained it. So we want to be able to explain the good, the bad, and the ugly. In my eyes, I mean, I kind of see this more as a tool that's helped a lot of home buyers. Obviously, with the rise in many things, it's been very difficult to save money. If you have a family member lend you money, they're going to want something back. They're going to want either interest or they're going to want it back next week. So, I mean, at least I know that's how it would run in my family. But no, I when you do the first the Hometown Heroes, it's really that it is in the form of a second loan, but there is no interest. So you're not paying any interest on it. You're not making any payments. You just got to pay it back at the time of, like Tom said, of the sale of a property, um, not living in the property, not being primary or refinance. So you want to make sure that you know that. But again, it's money that's there for you to use during the time that you are living in the property.
And look, it's a good loan. Again, look how the increases of conforming and FHA loan amounts have increased, which means that most likely your closing fees are going to increase. And not because we're charging you more. We're limited on these Heroes programs. Everything is pre-programmed for us. The rate is the rate. The costs are the cost. We've got nothing to do with that. But it's still expensive to get in the front door. Again, both of us, 9 out of 10 times, look, I can afford the monthly payment, Tom, but it's just getting in the front door that's extremely challenging. Again, you can get some people can't get gift funds, or maybe you have a retirement account, 401k you could borrow against, or a family member you can ask for gift funds to help. But even still, the second Heroes loan is a huge plus.
Yeah. Yeah, I think that's definitely a plus. And then again, keep in mind there are other programs. So if we were to run out of these funds, don't feel that you have to just rush to go find a home that you have to have this minute just because the HomeTown Heroes is available. There are other programs that are able to help you. It's not a one size fits all. Obviously, there's a checklist of items that we need to be able to make sure that you are eligible for it. Of course, the credit score, there's got to be a 640 minimum credit score. The HomeTown Heroes program, it's pretty much it's income based. So basically it's going to be whatever qualifies you. There's other programs that we have that it's household income. It's household, the amount of people that live in the home. So there's a lot of different things that you could look into. You may qualify for one, may not qualify for another. So that's another thing we want to make sure that, that we're able to just point out, I guess, before, you even start considering, or just know that there's qualifications for that.
Michelle's asking here on the chat line, what about like previous credit issues that she might have had? What we can do, Michelle, is we can contact us. Certainly contact us. We'll do a soft credit report for you. It won't affect anything on your score, nor will it put an inquiry on there. But we can see what is on your credit report, what we need to fix to increase your credit score if we need to, or if maybe we only need to make a couple of adjustments to get your score where it needs to be, or it may not need to be anything. Some people have, old medical or other debts on there that sometimes may not even be concerned with when it comes to the loan. So certainly reach out to us and we'll certainly get you on the path to take the next steps.
Yeah, we do have a really, really cool system that we're able to use. And basically, if there are any blemishes or anything that we're concerned about with your credit score, we would be able to do like a rapid rescore. There's a system that tells us if you lower the credit card amount to this amount, not zero. Sometimes it's zero, but sometimes just don't go out there and thinking that you got to get rid of all of your debt in order to apply. Just come talk to us, because sometimes paying a credit card off can completely hurt your credit as opposed to leaving a certain balance on there. So we're able to see what it is that you need to have on that credit in order to reflect certain amount of points going up. And then we're able to go to the bureaus instead of waiting 30 days in order for that to hit your credit. We're able to just, if we could obtain for example, an updated statement, we could go straight to the bureaus and get that increased for you. So there are steps that we can take that we can help. We don't fix credit. And I want to just be clear on that, because I have had people reach out and say, I need my credit fixed, and I can't fix credit. But I can at least tell you what you could do in order to get your credit a little bit higher for qualifying purposes.
Yeah, and again, credit, there's no science to it. I mean, you have to be a little bit challenging. Again, my X amount of years of doing this, I've had awesome credit and I've had terrible credit, and it is a challenge getting it up there. But we've experienced it. We're kind of no different than whoever's watching out there. We've had our own experiences that we've gone through. So good, bad, ugly, will kind of put you in the right direction there. And something else.
No, I was going to say, I share this all the time. I remember the first property we purchased out in Loxahatchee. It was so funny because I seriously got declined like 2 or 3 times because I was just too busy having too much fun in college, if I must say the honest truth. There's quite a few clubs that were probably kept open just because I was there every weekend. Um, but again, just be transparent and we've all been there. So don't no need to feel ashamed or anything just by letting us know what your situation is, because that's the only way that we're going to be able to help. But we've all been through it, and again, that's how we were able to learn. And I'm not going to even sit here and say that I'm the poster child of anything right now, because God knows that even now there's life happens. But just know that we're here to help you. Just once you share the information that we need to have, then we'll be able to guide you a little better.
Yeah, what's the saying? The shoemaker's kids wear no shoes.
Yeah,
So,
that's us.
but anyways, yes, we've gone through. So really, after being in any kind of thing for so long, obviously you're going to go through goods and bad. So yeah, just reach out to us. We'll give you, of course, some advice and some options. And the other thing two things I wanted to point out, and I did experience this with with a customer of mine that's looking to refinance. Please try not to be late on a mortgage payment. If you feel that you're going to be late or you're struggling for that month. Again, I'm not trying to give you direction on being late on anything, by all means, but a mortgage payment is, in the mortgage industry, a mortal sin, more or less. I mean, that would really tear up your credit score. He went from over 700 to just about a 500 and just under. So, in a matter of minutes. So again, we all have car payments, we all have credit cards, things like that. When things get tight here, I usually ask my wife, look, make the minimum at least on the credit cards, just so at least we can stay current. But yeah, try not to be late on your mortgage payments.
Yeah, or even in the process of the when you're in the middle of a transaction, to send out, even if you have to send out your minimum payments, do not skip a payment. I had somebody same situation. We were under contract. We were probably, I want to say, maybe 2 weeks away from closing, and they missed a $25 minimum payment.
Mm.
And to get the company to reverse it, they just pretty much gave them a hard time. Some companies, you could pretty much say, hey, you know what, I've never been late before. Could you please reverse it? It was a big whoops, and then they'll be able to take care of it for you. And then you have some people that just won't do it. So just don't take that chance. And we had to pretty much ended up having to cancel the loan because there was no way for us to increase the credit score. It was a huge drop in their credit, and unfortunately we couldn't even get them a home. So yeah, so even during the transaction, minimum payments, don't skip mortgage payments, don't skip credit card payments. Whenever we pull your credit, we want to make sure that throughout the whole transaction that the credit remains the same, meaning you're not pulling new credit. You're going to keep maintaining your responsibilities, your credit scores, and everything the way that they are. But it's just so sensitive. Credit is so sensitive that you do one thing, and it can completely destroy, your points just from 1 minute to another.
And even if, and I've had borrowers after doing this for 25 or 30 years, and again, I just try to say to them at the time of application, even if you're going to be walking into a dealership, let me know. Don't give them any kind of information. Keep in mind now, all computers talk to one another. There's no secret. So if you're under contract and you have a mortgage in process, and if you go to the BMW dealership and they pull your credit, we're going to get notified. And not meaning Tom's going to get notified, but underwriting will get notified. Yeah. It'll say, Elizabeth just got her credit pulled by BMW. Go see what kind of car she just bought, and then now you got to add that car payment into the debt. And it's just not a good time to do anything like that, especially when you're under contract.
I laugh because there's actually a meme that I saw the other day on Facebook, and the meme was just basically, oh, you decided to go with another lender. That's wonderful. You should go get a new car to celebrate. There's a reason behind that. Like, there's a reason that meme is hilarious, and it's because exactly what Tom said. So yeah, if you go with another lender that's not us, go get yourself a new car to celebrate.
Go get yourself a new. I'm telling you, a Porsche would be great. Pull up at your non-closing in a Porsche you were supposed to close because now you'll be living in that car. Anyways, yeah.
I used to joke so much with some of my clients. I would say, if your car breaks down, you either Uber, Lyft, you call me. I'll take you to work every day. Do not get a new car.
Yeah.
You hold on. And it was just a joke, but really that's what it is. Don't want to touch your credit. You don't want to touch your job, whatever we qualify you for. That's what we need it to be at the very end. Everything you're doing, your income, your credit, your savings, it needs to stay the same throughout the whole entire process. Otherwise, again, it could completely destroy the transaction.
We should do a show one day, or what we're doing, and just talk about the experiences that have kind of put a kink in things along the way. Again,
That would be like a 3-hour show minimum.
we'd have plenty of shows to watch there. But whether it's the rooms to go where you don't have to pay for another 10 years, we know they'll know about it. And again, you're going for a 30-year mortgage, so just because you don't have any payments until the year 2030 or whatever, it's still got to be calculated in your debts, or it'll kill your
Yeah.
deal. So,
Yeah. It's so funny. Yeah. And things like that happen. I mean,
yeah.
but you have to be able to tell us, because we will find out, even if it's your employer. Like I had a couple that was actually moving from Washington State to Florida, and they decided that they were going to come in, their RV. So they were pretty much traveling all the way down to Florida, and it was great. And if they were working remotely, not a problem, but they ended up quitting their job. So we ended up doing a verification of employment. We went, "What do you mean you're traveling to Florida jobless?" So at that point, they were just, it was very hard. We had to find, dad to co-sign. But it was just, it was one of those things that it was like, oh, I thought we were done. We're headed that way. But no, you can't make any of those changes without notifying us. As silly as it may sound, just run it by us and let us know.
Yeah, yeah. I mean, even when it comes to notifying your HR department if you're going to be quitting in a little bit or anything else, anything.
Retiring.
Yeah, exactly, or going to be retiring as soon as you close. You got a retirement party. And just nothing like that. Just especially at the time that you get your contract, will guide you at closing, because some of the mistakes can be, threaten your closing, and then you're under contract and you're kind of backs against the wall. So
Fun times. We've had a lot of fun times.
yeah, it's great times making some of the worst ones are at the bank, but we don't need to go down there, because here, as long as everybody stays on queue at the mortgage firm, you'll close. As long as the borrower's good, we're good. I mean, 7-8 years now, I think I can close maybe on one hand and have some fingers left on the ones that didn't close. So I mean, the bank, it was a little bit more, you were just praying that it would close from the time you took that application. Something else I want to just touch on. For those of you thinking that rates are coming down now, so you're going to be waiting for housing to come down, don't wait. I don't see that happening. I do see more listings coming up. I don't know if you get them in your Facebook feed or with the realtors that you're dealing with, Elizabeth, but I do see more listings and more property hitting the market.
Mm-hmm. I do see more inventory.
Yeah.
More inventory, and I do see, and by all means, I'm not speaking about specifically about any realtor. Just know that whenever we do see seller concessions, that is entirely up to the seller, and that's entirely up to your realtor to negotiate that. But I have been seeing more of it. So that's actually, a positive thing, or maybe covering closing costs. Lots of positives, but we're kind of going back to, I guess, sort of like beginning of last year, not so much end of last year, beginning of this year, that, we were going way above asking price. We were, I mean, it was just very hard to find a home, just because the competition or the offers that were being put were absolutely insane. So we're kind of almost going back to what the norm was. More negotiation, more negotiation, and really just more options.
Yeah, I think it's been really kind of a tough year and a half, basically, because this last 12 or 18 months, we had to go from 2 or 3% mortgage rates now to all the way to 7s and 8s, just to bring us down to where the norm should be, which is 5 and 6.
Yeah.
So, there was really been a heck of a shakeup, I think, over the last 12 months. Again, the Fed never has raised rates in the past so quickly, so aggressively. And it really did put a pin in the market, especially coming off of COVID. Again, when, like you said, no appraisal, 20,000 over asking, 30,000 over asking. Here's my firstborn. Here's this. Here's that. It's no appraisal, no inspection. It got kind of crazy. Yeah. So luckily, I think we're coming back down to just where hopefully a normal market could be. Good for the market, good for both real estate. Get everything back on track again.
Yeah, for sure.
And insurance. We're going to touch on insurance real quick, because again, we discussed with all of our buyers that the moment you go under contract, the first step is to get a 4-point inspection and wind mitigation, so we can get an idea on what your homeowner's insurance coverage is going to be. If you're working with an out-of-state lender, shame on you, but okay. They don't know insurance in Florida. So if they're quoting you $35 a month for insurance, I question it. Yeah, again, get because insurance and roofs right now and are becoming a little bit of a challenge.
Yeah, and definitely. Yes, that's so important. I see pre-approval sometimes, and I'm like $100 a month on insurance. I'm like, yeah, no, you don't. It's that and insurance and taxes are two things that I think that are. Once I see a pre-approval from another lender, that could totally once again break a deal because the minute that if you're very tight on your debt to income ratios and they're quoting you $100 a month on insurance or they're quoting you $100 a month on property taxes. I mean, yes, there's still properties out there that are very low in taxes because maybe somebody held on to their property for a very long time. And now that they're selling, we go ahead and go by the actual taxes and then they'll adjust once they reassess. But, in the meantime, we'd be lying if that's what we put, as far as property values. We want to be realistic with what they are. Um, and again, if either the property taxes or the insurance go over a certain amount, like we do when we do a pre-approval, it's not based on the price of a home. It's going to be based on what you're able to pay on a monthly payment. Um, and that's pretty much what we go by. So yes, we include the taxes, insurance, principal, interest, and if there's an HOA. So we do have to take all of that into consideration, but just be a little bit wary. I think when you see that $100 a month for insurance, $100 a month for taxes, and $100 a month for HOA, and if you find that, let us know where that's at because I've yet to see one.
Yeah, and you touched on another thing where we're talking about HOAs and HOA fees and maybe condominiums that are going through a mess right now with condo approvals and with improvements that have just been put off over the years and special assessments that are coming up. That's why we ask the questions. We want to do the digging in the property. It's easier for us to try to prevent a problem than solve a problem, and that's why we try to do is get as much information up front as we can.
Yeah. Yeah, we saw that a lot. This year there was a huge change in condos. And we want to prevent as much as we can. I mean, there's a lot of things that are out of our hands.
It's all out of our hands. but
Yeah.
well, we have to juggle it. But yes.
Yeah, but we got to try to figure it out, and we're doing our best to pretty much get the word out on what it is that we look for up front. And really, we put this on the listing agent, I think, a little bit more, just because it is something that they should have. So, when it comes to listing a property, you're going to look like a superhero in front of your seller when you have the information such as your budget sheet, your balance sheet, your insurance, your homeowner's insurance policy. There's, I mean, even something like that, something as silly. It's no longer are there enough reserves, for a condo. It's more than that. If there's a certain percentage, as far as deductibles go, if it's more than 5%, we can't finance it, even if they have sufficient reserves. So there's a lot of things that we're looking at now. If you have an engineering report, get that up front. Ask your borrowers. I mean, really, or your sellers. There should be a checklist that you should have. And if the more homework you do on it, the less time you're going to waste for yourself, the less time you're going to waste for your sellers. You're going to seem like you know what you're doing there. You become the condo king, the condo queen. But in reality, it's just the time. And then on the buyer side, it's really sad. We've seen buyers spend money. I had one this year, spent $2,000 between the HOA, the condo approval. What else was it?
You got appraisal, probably inspection by there.
Appraisal,
Yep.
everything all
Everything.
together.
Yep.
$2,000 later, we can't approve you because the engineering report said that the balconies had some type of, issue and they were falling apart. So we couldn't even get it. We couldn't even get it approved. $2,000 later, and that's the kind of stuff we're trying to avoid.
And just in our defense, you might ask, well, why didn't you guys get that in the beginning? Well, this is the beginning. This is the things that we don't. First of all, it would be great if as soon as we requested or asked for something, we got it. But some associations have a way of dragging their feet, and so we may not get something until the last minute. And so that's why condominiums have become very challenging. Again, it's come down to And when we say we can't do it, it's not like Elizabeth and I or the mortgage firm can't do it. Fannie Mae, Freddie Mac, the government agencies won't do it. They won't insure that. It's just too much risk. And so that's why they're just not, they're being very challenging. They want the notes. In the last meeting, they want the notes taken in the last meeting. If there was anything that was talked about, either improvements, whether it be today or a year from today, no deal. There's no, so the condos have gotten to be a little tough.
Yeah. So, but reach out to us once again. Like, this is something that we could go over, even the listing agents. If you have any questions, by all means, give us a call. We have a list. Share the condo questionnaire with you. We have no problem with that. We want to be able to help our buyers have a smooth transaction with condominiums. Obviously, I think there's been a lot of pre-approvals right now that's pretty much what they're able to afford. Condos, townhouses, villas, and even townhouses and villas are sometimes categorized under the property appraiser under condos. So just because it's a townhouse, just because it's a villa, does not mean I'm safe, I'm good because it's not a condo. No, some of those are in property appraisers that they come up as condominiums. So we have to go by whatever they say. I have seen some of them that the listing agent will put townhouse on the listing, and then I, go into property appraisers and it pops up condo, and guess what? I got to go by not what the listing says. So just know what you're doing out there and what you're getting yourself into, and do your homework. When you're looking to list a condo.
Yeah, or if you're not sure what to ask for, if you're a fairly new realtor and condominiums just seem to be intimidating or daunting, please reach out to us. We'll give you a pamphlet to ask and to kind of go over what each one of these things mean and why we need it. I mean, I like things explained to me on a kindergarten level, so I try to explain things on the same way, only because that's how I like this. My first day at McDonald's. I'm at the fry machine. My first day at McDonald's. What do I do? Which I thought about doing, but so it's just one of those things. But anyways, a little after 12:30, please go to our Facebook page, like us, share, and pass the word along. If you're looking to get pre-approved or have any mortgage questions at all, please give us a call.
For sure. And of course, as always, we thank you. And I know we're coming up to like the end of the year, but I just want to throw this out there. Beginning of the year, we are going to have some goal setting classes. So stay tuned for that, because I think it's going to be more of instead of, this is the documents you need. This is what the process looks like. We're going to sit down. We're talking about your goal. If you don't know the SMART process, we're going to talk about the SMART process. I'll leave it at that. We'll explain next time what it is, but stick with us. I think next year's going to be awesome. And we just hope to be able to help as many families as we did this year.
Yep. Thanks again for joining. We appreciate it. Thanks for your time.
All right. Hope everybody has a great rest of the week.
We'll see you next week.